Is the Ghana Stock Exchange a bubble? The question on every investor's mind. Before you rush to buy or sell, let's talk about the one thing that can make or break your investments. In this video, I'll break down the psychology behind market bubbles and tell you what it means for your money right here in Ghana. Understanding the psychology of a bubble. First things first, what is a stock market bubble? It's when the price of shares goes way up, not because the companies are suddenly doing better, but because of a craze. Everyone rushes to buy, pushing prices to crazy high levels, and then one day it all comes crashing down. Imagine everyone in a marketplace deciding to sell water for 100 Ghana cedis a bottle, not because it's scarce, but because they believe someone will pay for it. When people stop believing, the price plummets. Now, let's talk about the 3 psychological biases that can make you fall for this trap. 1. Herding. Following the crowd. Ever seen a group of people doing something and you just feel like you should join in? That's herding behavior. In the stock market, it's when you see everyone buying a particular stock and you jump in too, without doing your own research. A study on the Ghana Stock Exchange, GSE, found that herding is a major factor influencing local investors. Everyone believes the crowd knows something I don't, which can drive prices up artificially. 2. Overconfidence, thinking you're a guru. Overconfidence is when you overestimate your ability to predict the market. When you've had a few successful trades, you might start to think you can't lose. This can lead you to take bigger, riskier chances and ignore all the warning signs. This is a common bias that can lead to making irrational decisions, especially during a market high. 3. Regret aversion and FOMO. This is the fear of missing out. FOMO. You see your friends making money and you get that uncomfortable feeling of being left behind. To avoid the regret of missing a big opportunity, you might rush into an investment without thinking it through. This emotional decision-making, rather than logical analysis, is what fuels bubbles. Is the Ghana Stock Exchange a bubble? Vital facts for a beginner. So, with all that psychology talk, is the GSE in a bubble? The answer is not so simple. But here are some vital facts you need to know to make your own decision. In 2013, the GSE Composite Index, which measures the performance of the entire market, had a massive year, rising by 78.81%, one of the best in Africa at the time. This shows the market has had periods of explosive growth. Liquidity and efficiency. Research suggests that the GSE is generally illiquid and not as efficient as more developed markets. Illiquidity means it can be hard to buy or sell shares quickly without affecting the price. Limited shares. The number of listed companies is quite low, and many have a limited number of shares available for trading, which can make prices more volatile. Economic factors. When the economy is doing well and people have more disposable income, demand for shares naturally goes up. Also, when interest rates on treasury bills and fixed deposits are low, investors often move their money into the stock market looking for better returns. This is a fundamental driver of demand. What should you do? Don't let market psychology push you into a bad decision. While the GSE has its challenges like illiquidity, it also has a lot of potential for growth. The key is to be a rational investor. Instead of following the crowd or giving in to FOMO, do your own research. Understand the company you want to invest in. Look at its financial health and its long-term potential. Remember, investing is a marathon, not a sprint. This is not an investment advice. Be sure to do your own research before taking any action. Have you ever felt the pressure to invest just because everyone else was? Share your experience in the comments below. Like, share, and follow. Subscribe for more tips on investment.